Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market. Let's talk about what happened today. Pretty wild day today in the markets. Well, for the most part, I guess. It's kind of boring, but also wild. We'll talk about it, but nonetheless, let's just get right into it. If you enjoy, don't forget to hit the like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section is live on YouTube. The link is down below for just $2.99 a month. You can access all my intraday thoughts, posts, updates, technical analysis, et cetera, on Tesla. Sometimes other stocks, so obviously mainly Tesla. Options flow, of course, every single day the market is open as it's trading. So if you're interested, the link is down below in the description. Would love to have you there. But let's just get right into it. Tesla closing the day in the red, down about 1.43%, which is going to be putting us at about $171.31 per share, which unfortunately compared to the market is a bit of an underperformance. The market, beautiful red to green day today, right? QQQ up about 0.25%, SPY about 0.5%. And yeah, so, a bit of an underperformance for Tesla today, but let's talk about it, right? Let's discuss like what actually happened today. So nice looking candle today, right? A bit of a hammer candle, right? It's a decent looking hammer candle, but it's a red hammer candle. That's number one. And the issue here is the fact that it's not happening in the middle of a downtrend. Like you want to see these kind of hammer candles like down here. Like this is where you want to see it. Up here after this massive move from yesterday, it's not as prevalent. At least in my eyes, it's not. Instead, what I see today is an indecision candle, an inside day candle. So we'll talk about what that means moving forward, right? But the market for the most part, beautiful. Look at this reversion, like from all the way down here, pretty much just by the dip. Like the market just slowly treaded upwards pretty much the whole entire day, right? QQQ as well, right? Pretty powerful reversal. Now, obviously, we're coming into a pretty spicy day tomorrow with FOMC after two, especially PPI, major hot prints that came out, what was it, last week even, right? So I'm very curious to see what the hell happens tomorrow, what J Powell says, and how the market reacts. I'm going in pretty light tomorrow. I only have a couple swings on the table right now. I'm swinging Disney because it broke out of this ascending wedge with a tight stop loss, of course. I'm swinging, I have cash secured PayPal puts, where the hell is Starbucks? I'm swinging a little bit of Starbucks here, very light as well, and Marvell. But anyway, going back to Tesla. So what does it mean, right? What does this mean for Tesla? So again, the thing I'm looking at is as follows, right? We had another buy the dip opportunity, right? Tesla massive fall. We had the China numbers come out, which I talked about right over here, right? And they're not amazing, right? If you look at this, Tesla is well, they're not really. Can I look at this? Ooh. But essentially, the point is the numbers for China came in for Tesla, insured vehicles, and it came in lower, a little bit lower, like not amazing numbers, honestly, lower than last week and also lower pretty much year over year, right? It's not showing growth, which is the issue here, right? So bit of a concerning sign there. So we'll see how that, plays out overall in the longer term, but the market, probably combined with technical analysis is just kind of selling Tesla off a little bit and definitely showing some underperformance today. But we did have a beautiful buy the dip situation, and now we're just kind of going sideways for the rest of the day, which again, like I said, the most important thing to note here is the fact that we are creating an inside day candle, right? If you turn on this indicator right here, you can see yellow candles are all inside day candles, and what they usually mean is, well, indecision, number one. Number two, you pretty much want to wait. The way you play this is you want to wait for a break above pretty much, so tomorrow or the day after even potentially, but probably tomorrow, you want to wait for a break above the high of the day today or the low of the day today. And most likely, there's a good chance that you'll probably continue in that respective direction. So for instance, if you remove this indicator for now, and let's say we go into the 65-minute chart, right? So we have this little series of candles right here for today's movement. So essentially what you want to be looking at is any break above this kind of area right around here, we'll say, right? Which is pretty much the high of today, which is pretty much 173, really. There's a good chance that we move up from there, right? Obviously, we have 175 resistance not too far above us. So if you want to be extra safe, 175 is still the area to break, in my opinion, for, a little bit more of confirmation. But that's kind of how you play inside day candles, right? Once you pick a direction above or below the high of the day or the low of the day respectively, the moves usually, not always, of course, nothing's guaranteed, but usually continues in that respective direction. And same thing, with the low of the day, right? Pretty much anything below 167.5 roughly, right? So those are the two main levels I'll be watching pretty closely tomorrow. And, we'll see if we break one of those levels. If we break below the bottom, I'll be looking to buy the dip, as we know, kind of base around at the probably 160, if not maybe finally make our way to about the, mid-ish 150s. I still think that's very possible. And we'll see how that plays out. And of course, if we break 175, 173 to 175, I do think that, mid to potentially, low to potentially even mid 180s is actually very possible as we come into this congestion period rally rather through this congestion period and come up right into this increase in volume right here, which will pretty much be where we rejected at during this congestion period, which is, again, like I said, around 182, 183, right? Low to mid 180s. Wouldn't surprise me at all, which would also be, depending on when it happens, can also be coming up for the retest of this yellow line that has been descending and has been essentially acting as a massive resistance so far. So those are the things I'll be looking at, right? But keep in mind on the daily, right? Tesla's still bearish, right? The momentum is still very much bearish, still very much in the purple. So, there's still a lot of work to be done to truly reverse this, right? The MACD is still technically bearish, though it's curling. That's not a bad sign. The RSI is looking okay here, honestly. So there are some signs that are signaling that, Tesla might find a bid here. It might actually find some movement to the upside, but it really comes down to what Jay Powell says tomorrow. And that's pretty much the main thing I'll be looking at. There's no reason to guess. There's no reason to gamble this. You just let the market decide the direction it wants to go and you play off of that, right? There's no reason to think you're smarter than the market. And, we'll see how that plays out. And that's the main thing I'm personally doing. That's just how I'm playing it. I don't want to try to, think I'm smarter than the market here. There's no reason to do that, because if you do think that, you will most likely get humbled pretty quickly. Now, those are the main things I'm looking at, right? Now, obviously, we have the 21 EMA not too far above us, right? Sitting all the way up around, the low 180s, which is, again, if we break 175, I do think that we'll come up to somewhere around this 21 EMA to retest that. Probably still find some rejection, most likely come back down, potentially, hopefully turn this level of, mid to low 170s into a support. And then I think, we could potentially get a breakout, and that could look pretty decent, right? So for instance, we could do something like this, come back down, retest, and then ultimately break out. That would be like the bullish situation. Will that actually happen? Well, who knows, right? Nobody knows, but that is a possibility, right? Obviously, the other possibility is we do break down below here, right? We break the lows of the day, like I said today. So, like, for instance, tomorrow we do it, right? And we come down. We maybe come back down over here, potentially even crash well below this, come back, hit the 150s, potentially come up to the 160s, maybe turn that even into a resistance, and then potentially even come down to the 140s. Like, that's not impossible, which I do think there's a good chance if we do come down to the 140s. I think there's a pretty damn good chance that this would be roughly the bottom area of Tesla. I do think there has a good chance to bottom around here, and we can ultimately finally make our way back up, slowly but surely, because again, don't forget, if we go over to the weekly chart, right, we have this, I don't know why this moves like this, but let's go ahead and bring that back over here. Right, bring this back over here to this situation right here, and you can see, right, we have this overall, go ahead and fix this a little bit here. Right, we have this channel, right, or a kind of channel, I guess, or trend line, if you will, more specifically, that has been acting as a support, right? It started over here, bounced off of it beautifully right over here, which essentially created the trend line, and now, the trend line exists once again pretty much around the low 140s, right, roughly. Again, mine's not drawn to absolute perfection. You can even argue that it could be drawn like this, but it's still pretty much in the 140s, right? So that's why I strongly believe that, if we do continue weakness, which again, I still wouldn't be surprised if we do continue this weakness, right? We still technically, the weekly candle did break below this descending channel on the weekly time frame. There's still a lot of time of this week, especially with FOMC tomorrow, to determine how the weekly candle for this week will actually look like. But Tesla, even on the weekly time frame, is still bearish. We're still well inside the purple territory over here on this indicator, which is the chats indicator. Pretty nice indicator showing momentum, especially in higher time frames. It's nice, right? Still showing bearish momentum. If we ever break out of this purple area, that would be a nice signal on the weekly chart that, the bottom might be in. For instance, back here when we were trading, in this purple area right here, right, we kept descending down, right? And then you can see, obviously, it's not going to tell you, you won't catch the bottom, but no one can catch the bottom. If you think you can catch the bottom, you're delusional, right? Plain and simple. But, what it does show you is the fact that, as it's been kind of moving up, we can even turn on the colors, right? You can see that, once we started rallying up on this massive candle, the bottom, seemed to have finally been in. And, it's looking pretty decent. And you could have entered on these kind of moves up over here, and then ultimately had a nice, beautiful looking bull flag, and then you continue upwards, right? So, you want to wait for those kind of situations. And you can see it almost came back down to kind of retest the purple area as it kind of broke out of it, if that makes sense. So, you can use these kind of things to kind of determine, when the bullish, or rather the bearish in this case, momentum potentially has subsided, right? But so far, nothing is showing that it has subsided. In fact, it's still showing that we're still in bearish territory. Again, that can obviously change. That doesn't mean that it has to continue in bearish territory. It can obviously continue moving upwards and then ultimately make this a flip to the bullish, or to at least to the neutral zone. And that can be some decent confirmation that we have exited bearish territory, especially if the MACD on the daily chart decides to finally flip bullish. So those are the main indicators I'll be waiting for before fully turning bullish. As of right now, it's kind of a chop game. It's really kind of a chop game with still risks to make a lower low here, right? To break below 160. I don't think that's out of the equation just yet, right? The fact that we did get this massive gap up and, held okay today, even though the market was green, is not bad. But again, with something like tomorrow being FOMC, especially after 2 red hot CPI prints and PPI prints, we'll see. We'll let the market decide for us. But again, the main thing to look for, again, is this indecision candle, which is the main thing I'll be looking at tomorrow, with a break below or above the high of 2 days candle would be what I'll be looking for to potentially get a decent idea as to where the next direction, a movement direction will be. And that's kind of what I'm doing right now. So again, no reason to rush it, no reason to, to go too crazy about it. Let the market decide for you, let the levels decide for you. And like I said, I gave you the levels to watch out for tomorrow. I gave you the levels that I think it can go to if one of those levels decides to break in that respective direction, of course. And now we just wait. We just wait and let the market decide. No rush, right? Again, the market did recapture the 21 EMA today, the QQQ, for instance, which is good, but it still arguably broke below this downtrend, which isn't good. And we have arguably started showing slowing of bullish momentum. You can see on this indicator, same one. We have fallen out of the green area, which is of course signaling bullish momentum. So the bullish momentum has stalled here. Is it gonna come back up and reinvigorate itself? It's possible. It really depends on tomorrow, in my opinion, but we'll see. We'll see how it goes. So anyway, that's kind of what I'm seeing right now. Definitely some caution is warranted. Again, the way I look at it is this: I would rather miss some gains, but then at least enter on more bullish confirmation and avoid gambling, rather than thinking I'm smarter than the market, pretty much entering a gamble trade right now with no defined risk, and just hoping the market doesn't tank and reacts positively to tomorrow's FOMC and JPOW's. I'm assuming he's having the interview at 2:30 as well, and reacts positively to it, at the risk of potentially holding a bag, which I do think if the market starts correcting from here, you'll be holding those bags for several weeks, honestly, maybe even a couple months. There is a possibility. So we'll see. We'll see. Again, I'm just playing it safe. That's just the way I'm looking at it right now. No reason to rush into it. Anyway, that's the kind of for this video. That's all I really got to say for now. So with that being said, let me know what you think down below. Ladies and gentlemen, thank you so much for watching. And of course, I'll see you tomorrow. Peace.